Steve, of course, this is insurance has been, let's say, a vibrant asset class in terms of mainland investors specifically. What are we seeing in terms of these latest regulations?
Yeah, absolutely. Insurance obviously is an area that they needed. China felt, and these new platforms as well were filling a gap, if you will. And now the regulators are also trying to fill their gaps, of course, in this booming part of the economy and fulfilling a need. Let's face it. I mean, Ant and others added insurance, and it became a big part of their offerings across the platforms. And there have been crackdowns, of course, on fintech offerings. So these latest pronouncements, if you will, are in addition to what we've already seen, the regulatory action against some of these fintech players, whether it's Waterdrop or other offerings from Ant. The CBIRC, which is the Banking and Insurance Regulatory Commission, stepping up its scrutiny of these insurance tech platforms, ordering them to curb improper marketing and pricing practices, A, and then B, step up privacy protection. And what's interesting here is in this statement that Bloomberg News has obtained from the CBIRC, they're asking these companies and these platforms to do these rectifications, if you will, voluntarily. Well, when it comes down from the banking and insurance regulator, nothing is voluntary. It's urging them to do it because they added the extra sentence in saying that those who fail to comply would face severe punishment. And we've already seen what kind of punishment can be had, whether it's folding into, with the banks, with Ant being folded into a holding company with regulatory oversight by the PBOC, or other rectifications that could mean a significant downsizing and large fines. Stay tuned to this sector.
Not just only this sector, but it seems that government scrutiny could continue for a while, right? According to the latest guidelines from the State Council.
Yeah, the State Council also out with a statement late yesterday, giving more clarity, if you will, on the timeline of this regulatory push. It could last another 5 years is the time frame that they're talking about. They're basically saying in a statement late Wednesday, signaling the push to regulate many parts of the economy, which of course has gone beyond just the platform companies like Alibaba and Tencent, but into ed tech, educational technology, and the tutoring companies. And now we're seeing insurance, whether it's ride sharing like Didi and the like. The State Council statement said it will actively work on legislation in areas including national security, technological innovation, and anti-monopoly to improve the legal framework. And the statement says the moves will ensure a healthy development of new business models. Now, obviously, this could stoke further fears from investors that this regulatory push and this regulatory crackdown is widening and will be lasting.